Hello, everyone. Well, following Friday's better-than-expected U.S. employment data, the debate in the market is whether the Fed will start tapering off its bond purchases earlier, perhaps even at next week's FOMC meeting, or whether it will be content to wait longer. You can be excused if you're unclear about this crucial matter, because everyone is. The headline in the New York Times read, "Fed's plan to taper stimulus effort not expected until next year," while the Wall Street Journal proclaimed, "Fed closes in on winding down bond purchasing." And these are written by people with access to FOMC members. Personally, I expect the FOMC either to begin tapering next week or at least to give a better signal as to when the tapering may begin. The real question for the markets, though, is whether tapering matters as much as it did last year. Last May and June, the whole idea was new, and many investors were caught out with big positions in the emerging markets. Since then, though, investors have had half a year to reduce their positions. Moreover, the Fed has made a clear distinction between tapering off their bond purchases and raising interest rates. A change in Fed policy, therefore, will have less impact now than it would have had 6 months ago. And Friday's activity reflected that fact. U.S. 10-year bond yields actually closed 2 basis points lower, while stocks held on to solid gains. Also, the dollar lost most of its gains against the other G10 currencies. Dollar-yen was the exception. The yen may be affected by rising geopolitical tensions in its neighborhood. The dollar did retain much of its gains against the emerging market currencies, however, which suggests that while investors may have reduced their risk in that trade, they're still exposed. So I think the dollar is likely to perform better against the emerging market currencies than the G10 currencies as tapering talk heats up, but only selectively. Investors who want to play the taper should look at those currencies, particularly the ones in the countries that still have large current account deficits. Meanwhile, within G10, it might be best to avoid the dollar for the time being and instead concentrate on those currencies where a strong trend is still in place, such as sterling and the yen. In that respect, the Australian dollar's recovery Friday bodes very well for the commodity currencies, which may benefit if investors now think that tapering is largely discounted and a risk-on trade begins again. For today, comments by Richmond Fed President Lacker, St. Louis Fed President Bullard, and Dallas Fed President Fisher are likely to be the main feature of the market. Everyone will be waiting to see if they give some clues as to FOMC members thinking about tapering ahead of the next week's meeting. Mr. Bullard has previously said that policymakers could begin tapering at this month's meeting. Elsewhere, the ECB's Mersch and Bank of England Governor Carney will also speak today. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. It's Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading.